What's up, YouTube? It's Todd Horse here with Taste Tracker, and today I'm going to do another Apple Wheel Challenge update. The last time I did one of these was October 7th, quite some time ago, almost a month. So I think the best way for me to proceed, catch you up to date, is go over all of the closing transactions I've had, then show you my current portfolio, and then go over the charts of those and what I'm thinking in those. So back here on the 7th, didn't realize anything or close out any trades. The 19th, I had 76. Then the next day, I had 110 from closing out Visa. Um, Let me skip up here to the 27th, end of last month, 270 from LLY. That was in a position I was in for quite some time. This is a this other one is AMD. Okay. Um, 540. This one I closed out a bunch. I had done some, it says adjusting. Yeah. So I adjusted that. I didn't real close that one. The only one I closed here was another LLY. Those I had both been in for almost the same amount of time. I had put a position on it, dropped a little bit, doubled down, and then it proceeded to drop. So I held for something close to 60 days there on those. 25 this day on Apple, 204 on Alta. Um, as we're getting into November, all of these trades were shorter. So this was a 5 day trade. Apple one again, that was a 2 month hold kind of thing. As I held through September, I wanted to get off more positions early on September, close them out, and that way I could enter in more mid to late September, as that's a pretty down month, generally speaking, annually. Um, didn't get to do that as much as I would have liked to, so I held through September and then October till I basically called up at the very end of October. Was able to close out some of those positions and then enter in new ones. Those new ones have already started closing now. So had I been able to execute my plan properly, I would definitely be ahead, excuse me, compared to where I'm at now. So next year I want to start phasing out closer to maybe beginning of August, mid-August at the latest, and just close out positions. And definitely go lighter into that time frame. So anyway, 204 here from Alta. Then today I had Amazon that was almost 2200, and Chewy, which Chewy I had put on again 2 months ago. For that was an earnings play, wasn't supposed to be a long hold. That was my first earnings play of this season, and yeah, did not go as planned, and I ended up holding through this whole time to finally exit today. But it was a nice gain nonetheless. Okay, so let's go over to the portfolio page. Apparently that doesn't want to load, so we'll hop over here to Tastyworks. So here's my current portfolio. You can see most of it's red, and even these green ones aren't particularly green. Let's see if Twitter, that one's a new one. I haven't rolled that one. What I'm looking here for is if I actually rolled these and they're not actually green, but it's just the issue where, yeah, so PLTR to break even is 221 and 163. Okay, so yeah, I could sell that one um, for a profit. Although, let me go in here. I originally opened it for 191. I had 10 contracts at that point, closed half of them for, this number looks weird. I closed half of them for 161, which put my new average at 221. So, in any case, even at my original one, that was 190, right? So I could still make $30 off the remaining five contracts individually. Okay, so this is my current portfolio. I guess I'll start at the top here. Um, Even though most are red, I'm definitely happy with where things are at the moment. Um, I put on a double down on a bunch of positions and adjusted them as needed. So yeah, so let's go to PLTR. This is one where I don't know if you can see. Let me try to blow this up here. Nope, wrong one. Okay, so I have a green line here and here, and I'm thinking that it's wedging here. So we're getting really close. Obviously, it could break out anytime soon here. You could also see 29 as a point where it's shooting for. However, we have a making higher lows here. We're kind of wedging here. When this gets really narrow is when I'm really looking for it to break out. Of course, we have earnings. Earnings has not been going good this season in general. RSI is good. It's at a spot where it's gaining momentum and it's hot at this point. MACD is not the best because it is actually starting to roll over. So really, I wouldn't be surprised if it comes back down in here, consolidates again, bounces off, confirms this line again before we see a move higher. But that would be potentially around $24. Um, Now I have the 27. The idea with these is I'm trying to do either wide spreads or even very narrow spreads, but instead of taking a loss, rolling out, down, and wider instead of realizing losses. Um, I've been doing that short term recently, and it's been working out better. 2021 has not done well for me to just take spreads and call it what it is, whether it's a win or a loss. I'm having to actually defend these more. Um, Doing naked puts has been really great. Obviously, that's pretty capital intensive, and your ROI goes way down because of how much capital you have to use per position. So that's where these really wide spreads come into play, which are synthetic naked, in that the Balt leg is so far away that the Greeks don't offset each other. You're not spending that much money on it, something like $10, $20 you're wasting. But that gives you confidence that you're not going to get margin called. And uh, if for some reason you got assigned, you could exercise your Balt leg. But the idea is still like a naked scenario where I would never or try to not use that long leg. I would try to roll it out and wider and down just like I would a naked put. So anyway, so that's been doing good. So yeah, so I have the 27. Definitely looking for that to pop up here to this line, and that might be good enough for me to exit. I don't know. I'm looking for 91, so I only need 60, $70 here to come off of this premium, which expires in 15 days. Twitter is a new one for this account. I have some in the other account on bad earnings when Snap and Twitter both went down. I think the support is in this range between 50 to 50 and 54, we'll say something like that. We are kind of trending down at this point, and here I would expect a bump up. Both Snap and Twitter have been slower to recover, Hood as well, but they all did bad on earnings. They all had this drop and then are building a nice base. The longer this base is put into play, the bigger move up we can see, and the less likely it is to roll over. If we only stay in here for a couple days, then the likelihood of it rolling over increases. I am comforted by MACD turning up. Obviously, it's slowing down. We're just kind of chopping up and down here sideways, but RSI has a lot of work to do. Obviously, the good point here is I entered after earnings, so I didn't participate in this move down, and earnings is behind us, so we don't have to worry about that coming up. Yeah, so for that one, I have the 53 strike. This one is a narrow and lots of contract one where I'm looking for 50%. Opened it up for something like 110. I don't know what do I have over here? 113, and it's already down to 1.7, and that's enough for 55 bucks. So although I'm throwing $10 away on contracts, $20, the nice thing is here, Tastyworks maxes out um, the number commissions that you get to only $10 per leg. So I'm basically paying the max I'll ever pay for a leg here. And anything I do beyond this, if I want to double down, I'm not paying additional cost. Okay, so Hood is the next one. Basically, same story here. Uh, Except for this one, the first position I put on was a wide, so this is a 13 wide, and we'll see what the credit was on that. Sorry, got my alarm going off. Okay, 543. Um, and that one I only put on 8 days ago. Um, and then the new one I put on today is again a 4 wide, so it's narrower. It's a little bit further dated, but then I've got 10 contracts instead of one. So let's go to that one out here. That one I collected 185. If we look down here, the max I can gain from this is 543 while risking 757. The max I can gain for this is 1850 while risking 2150. So this one is a bit better at a potential 86% return. This one is potential of 72% return. So this one's slightly better, more efficient. Um, but again, because it's so narrow, they're offsetting the Greeks more. So you have to be choosier with the strikes. With naked puts, I don't mind going in the money some, even though I think it can get up to there. Even if it doesn't, it's not a big deal because even if it increases $1, but my strike doesn't go out of the money, that move is still enough for me to realize enough degradation in that position that I can close out. With these ones, narrow spreads definitely have to be more correct about the positioning. You want them to be out of the money as quickly as possible. So either out of the money to begin with or at the money at the most. Um, but uh, and at this moment I'm doing stuff normally I would typically do like 45 days to expiration. These ones have all been 36, 14 even because I'm trying to simulate naked puts more than I am trying to do the $5 wide spreads, sort of the Tastyworks 45 days to expiration methodology. But yeah, so I opened this one and then to double down on that, put some more money in the game. I got a different position, but essentially the same. So let's go over and look at that chart. Looks identical to Twitter and Snap, where we had earnings here, had a nice drop down, but we could see the one difference here is we got this base set up. Let me make this bigger. We got this base set up, and then we get the pop. And MACD and RSI already looking substantially better from the initial drop. This is a pretty reasonable thing to think that it's going to stay above this yellow line. This is the IPO price. Obviously, that doesn't have to be the case. You can go below IPO price. These green lines have been trending down, and obviously we're below these both of these SMAs. That's not great. However, I do think Hood is a good company, and it will get there. Disney. One of the best things about Tastyworks is you can group positions like this, group the legs. A lot of brokers actually don't offer that as sort of, excuse me, basic as that seems. So this Disney position I entered in yesterday, and this Disney position I entered in 9 days ago. Um, this one is 32 wide and this is 15 wide. They are in different expirations. I did this to keep it clean as much as I can. I could have very easily put it on the same position, but then you have lots of different strikes for the same position, and it just gets frustrating to look at. So this one is a 10% max ROI, whereas this one is 40%. But you know, uh, the maximum potential return isn't necessarily what you walk away with. So I don't. That's not always the best thing to look at. This has more of a likelihood of winning simply because, well, first of all, our sold leg is lower. This one is 170. The other thing is because this is a wider spread, this sold contract is going to degrade faster than the long contract, and so I should be able to close that one position much faster. Add to that it's only 15 days to expiration, which means theta is going to decay even faster. So this one has a lot of things going for it. So sometimes a quick in and out is better than a longer one that could potentially net you more. I'm sure if you have any experience, you know what I'm talking about. For all of these, I'm going for about 50%. Apparently, I don't have a closing order for this one set up. So let's go ahead and do that. I always say close for 50%, and then go down one to account for commissions ish. Um, yeah, and then that's it. So that action there in and of itself, and then selecting these and rolling, editing, these are all things that um, every broker can do, but it's usually much, much more painful to do it in other brokers than this. Okay, so Roku had bad earnings yesterday. Again, like most everything else this season, I have the 335. I had to roll that out to December. I'm looking to exit at around $1,000, and right now it's at $5,000. I don't really want to get into this position again because it's naked and I would need $6,000 worth of margin just for this position. Even though I have 11,000, I'm not really looking to dedicate 12,000 that can fluctuate just to Roku alone. So what I did instead was open up a 10 wide here, 3 contracts today on Roku after the earnings to sort of utilize that. And you can see here the strike's obviously much, much better. 335, we were flirting with 335 the past several weeks, and this was actually green a couple days ago. As it was out of the money for a brief second. Now we're at 275 as the sold leg, which right now is trading at 290. Roku is a company that I use extensively. It's actually, well, I use a lot of these, but probably I use some of the most. I use Amazon a lot, and I have been a uh, Spotify customer for um, maybe the last 6 or 8 months. But Roku I use every day. All my TVs, which I have 2 properties and 10 TVs across those properties, and they all have Rokus on them. So um, now that said, I don't actually pay for Roku services, which I'm sure is where they make the bulk of their money. But let's go to Roku. As I said back here, it was 345 in this range, and I had the 335 strike. Clearly, I should have closed at that point. I think we'll get back up there again. I trust the company, but I never seem to get Roku right on swing trades. I had been day trading them for a bit and was pretty successful at doing that because they move a lot. Their premium is one of the ones that is liquid enough, but it moves a lot. So it's kind of like Tesla, where you can get in and out and make pretty decent money just day trading. Swing trading always seems to burn me, so we'll see here. But it's not a crazy drop, honestly. We were not too long ago at 295, so and right now we're sitting at 288. Big deal. So I'm not overly concerned. It's obviously going to need a bit more time here, but I entered in down here so that way in the coming weeks here we can get a move up off these earnings lows. Okay, moving on. Snap. Uh, Again, I'm pretty deep in Snap in this portfolio and some of my other portfolios. We're having a nice run up here on MACD. RSI definitely stabilized. It did drop, so this is definitely one of the reasons why we say 2 days after earnings you should wait to enter something because it did continue to drop. But since then, it's been basing. Look at that 20-day line. That's pretty dramatic here. But we're at support here, obviously, and then we have another support here down at 49, and then another one at 44. I do think this one holds. I think the short-term issue with advertising and stuff like that from iOS is just that, a short-term issue. Snap is one of the few social companies that has still been growing. Most of them have peaked and have started to decline in their user base, but Snap continues to go up. So I am bullish on them. 75 puts, these are naked. So I'm the whole way up here. But because of that, I had to roll the whole way out to April. So I've been toying with the idea of buying some covers for that, something, maybe the 65 puts or something like that. I've also been toying with supplementing it, similar to how I did with Roku, where even though this one's naked, I'm doing spreads down here to capitalize on the move down. Not exactly sure, but this was another earnings play that went wrong. C is the last one. Um, so definitely, I think in addition to either the wider spreads or the very tight spreads with many contracts, where both of those I'm rolling out, down, and wider, um, the that is one concept that I've really embraced lately. The other concept has been to try to defend my current positions much more than looking for new opportunities and opening those positions. And I tweeted about that today. Basically, I had this position on. Let me contract all of these and then just open up C and C. Okay, so this one I opened up 9 days ago, and then this one I opened up yesterday. Um, I'm trying to really look at my positions, look at which ones are down the most. So obviously I'm sorting by this column, the percentage gain. I see C's at the bottom, and I'm thinking, okay, do I still think C is a good position? If you look at my squiggle, this is one that I predicted weeks ago. Where's this line go back to? The whole way back to here. So I made this drawing on the 6th of October, so almost a month, and it's predicted basically to the T what the stock has been trading at for this month. Um, and so that is to say that none of this is unexpected. So when it's coming down here, I'm not surprised. Uh, the reason you could say, well, why did you put a position on back in here? Well, I didn't know it was necessarily going to do that. That is just something that I anticipated. So if it continued to move up from here, then I had a position on it and I could leverage it. If it moved down, then I can add another position down here, which I did, and then get the move up um, on both of those contracts or positions. So so I've been focusing more on keeping enough reserve to roll out down and wide, and then also defending positions, looking at what is most beat up, but I still believe in, particularly what doesn't have earnings. I have another account that has some of my more beat up ones, but they have earnings in the next 2 or 3 days. And given that earnings season hasn't been good this season, I'm not looking to enter those until post earnings. But in this case, all of them are done earnings. You can see at this column, PLTRs in 4 days and Disney's in 6 days. So I haven't doubled down on those this week. I don't know, when did I do Disney? Uh, I'm willing to give more to Disney, I should say, and double down more. Uh, and so haven't put everything, deployed all capital towards that ticker that I'm willing to dedicate to that ticker if I need to. So defending the positions, I think, is key here in 2021 as we go into 2022. I don't know. I am expecting a pretty decent pullback in the spring of 2022 coming up here. So I think we'll have a good winter season with retail, sort of like we always do or typically do. Stock market, retail, etc. will be fine. But going in spring, I'm expecting. Um, okay, expecting a pullback. So I have three contracts here. Max ROI on that is 114%. So that is huge, but it's an 11 wide. This one down here is an 8 wide. Max ROI is 47%. That's still great for me. Let me pause here and shut my door. Okay, so yeah, C is another one that I would be willing to throw a little bit more money into. And I saw the, recent dip here as an opportunity to put on another position. So we'll see. If this holds here, then I wouldn't mind putting another position or two on. If we drop down into here, I'm not sure where it's going to catch. It could be down here at 65, 64.80, 64.50, 64, somewhere in this band here, or the whole way down to 60. So I would want to see that move play out before I added any more. If it looked like it was basing or bouncing, then I might be more confident to throw in some more positions. Okay, so let's go over the general stats. Um, Originally, or in total, I've deposited 32. Now you might say like that number looks a little different. I did withdraw $550 already, and that was reflected back here in this figure. Um, but current net liquidity, what are we at here today? 34,723. At one point, this was over 35 today. It's just kind of been a whipsawy day, in SPY. But anyway, so yeah, so generally speaking, up around 6%. That's certainly not great, but again, remember I started halfway through the year. That does make a difference. So far, realized gains this year, 8,000 total, 3,000 just in this month alone, which we're only 4 days in, so that's great. Made 34 trades, completed 34 trades, zero losses on those. Average days in is 13, and that is increasing for sure with those couple that I've closed now that were through September. So some of the older ones over here, no, over here, like Roku, I've already had this open for 84 days and it's rolled out to December. So when I close that one, it's really going to increase my days in each trade. But on the whole, most of these have been about a week long. So that's great. I don't think there's anything else really worth looking at here that's interesting. So let me know if you have any questions. But that is the Apple Wheel account. I'll do the 2021 small account challenge update next. Thanks, guys.